Good day, traders. I trust you are all well. Welcome to Live Trading Profits, second Wednesday of the month. And thanks to the guys who have been part of the Wednesdays at the market with George, but some insightful times in the Asian session and just at the open of the European and London session. So we'll carry on this afternoon with an hour and a quarter, the open of the US markets. Now, presently, just have a look at what we're looking at. We have the news coming up in about 3 hours from now. And that's big news, inflation rate, core inflation rate, and the year-on-year, so double red news announcement. And we are slowly trickling into that zone where the news announcement will have a big impact on price action. So, you know, I as I always say, when there's news announcement, I tend to stay out of the market, depending if it's 100 news announcement, I want to be out 30 minutes before, couple an hour or so. So this is big news. So within an hour or so, we really don't want to be initiating any trades. And also, as we're heading towards it, because I'm pretty big on trading reversals, I really have to be very strict with reversal trades. As you know, reversal trades are always low probability, 40% probability of success. So ahead of news, just be a little bit stringent with price action. What we have here, 4 markets, we are viewing them on the 5-minute time frame. S&P 500, Hang Seng 50, UK 100, and German 30. So we'll drill into those shortly. The other markets, the other 4 markets are on the daily time frame. Euro Stocks 50, Nikkei 225, France 40, and Aussie 200. In terms of the allocation of capital, as I explained to the guys earlier, you know, you always have to have a set amount of capital that you bring to the market. We all have the bucket of cash that's in the bank somewhere. You take a percentage of that and you bring that into the market. Now, I bring 3% into the market every day, and I allocate it differently. So if anything sets up on the daily time frame that I want to trade, if I got 4 charts like I have today on the daily, I just divide, I allocate 1% of my 3%. So I take 1/3 of the risk that I'm prepared to risk in the market at any given time, and I allocate it to the 4 charts. In this case, divide by 4, 1/4% each. If they set up, and that's it, I don't go more than that. If I have 5 on, it's 0.2%. So maximum allocated to daily charts is 1%, the rest on the 5-minute. If I don't have any, any daily trades happening like presently, then the full 3% comes into the 5-minute charts. But even with that full 3%, it does not mean that I will take all of those trades at the same time. That's not what it means. It means, however, that I'm prepared to risk up to 3% of my capital, in this case, on a spread of these 5-minute charts. So let's have a look at what we presently have on the 5-minute charts, and a little bit of a discussion about where we were since the morning. So earlier on, the traders were in the morning show. We were speaking about the importance of this trend line here. And this trend line is a bull channel from mid-July, which clearly see on the daily time frame. So I'm just going to pop up the daily time frame. It's this trend line here that we're seeing on the 5-minute time frame. Now, the market, since this breakout above these lower highs here, and this took place in July, the market has been contained in that channel. As you can see, that's been a determining channel that's contained the bullish price action. So the bulls want price to stay within the channel, because if they can contain price action within the channel, then we'll continue to channel up and they'll break above this trading range, this bear price action here, because this sideways price action, you can analyze it further, but I'm not going to do that, is what ultimately resulted in a bear breakout. So the bears that created this breakout are defending the price level here. So the bears want a bear trading range. I want a trading range, and then obviously try and force a sell-off later on. But the bulls want to break above that. They want to break above this price action. And what they need to do is stay within this bear channel. Within here as well, besides this, this bull channel rather, besides this bull trend line, there is this low, and there's also the ascending 10 EMA, confluence of factors. And should the bears break beneath that, the bulls will resurface at these levels of support. So that's this particular line when you go to the 5-minute time frame. So earlier on, broke beneath it, went sideways, and bears go to a measured move of the break beneath that. And then at the open of the UK markets with a huge trading range created in huge candles, and the bulls have managed to break out above the open of the day, broke out above the bull channel, they're back within the channel that they wanted, breakout, follow through. So when that was created, that breakout, look from a bull perspective to trade long, we're looking for pullbacks to trade, but we did not get the pullback. Instead, we had a trading range created up here, almost similar kind of trading range that was created down here, and the bears are looking to force price action to come down beneath that level. The bears want the market to get back and break beneath the channel, break beneath the low of the day, and sell off to get to the low of the day. So what we're looking for now is to follow the bears if they are strong enough. Okay, bulls had a successful breakout here. Okay, so there is a gap that was created above the breakout candle and the pullback. So in this zone, if the bulls are strong, they'll have to reassert themselves in this zone and create a trading range which could last all the way up to the news. Let me put that in for us. Let's not change the color. So there was a breakout point. There was the pullback that we look at. So in this zone, this is where the bulls broke out and had follow through. The bulls, if they are strong, they're going to defend this zone completely and try and accelerate the market up and carry on, as far as they can go. Well, the initial objective, primary objective would be to get to test the high of yesterday. Right now, we're at the midpoint of yesterday, key level that we set right at the open of the day. Key levels that you need to look at: low of the previous day, high of the previous day, and then the midpoint. In this case, the midpoint is a key level for the bulls to get above. They try to get above that. They have failed so far. It's a key point for the bears to defend, because in all of here, it's a bear selling zone, because the bears want price to come beneath the midpoint of yesterday, then of course beneath the bull channel line, below the open, and get all the way down here. So we're waiting to be informed. If the bulls are strong, then they will create a higher low. So this low will be higher than that low. a higher low and attempt to accelerate up. If they do that, or maybe not accelerate up, but if they do give us a couple of bull candles, then we have a potential higher low double bottom. Then all we need is an opportunity for us to go long. If the bears are strong to break and close beneath this zone and try and close that gap as they're seeking to do, good for the bears. Then we've seen the bear strength, and all we need is a lower high of sorts, double top or a lower high. But we need to see the bear strength, so we cannot ignore price action in this area. Okay, so the more the bears encroach into this yellow zone, the more they're eliminating the breakout strength of the bulls that took place. We should be great, because then when we see a lower high, we have a lot more confidence that the bears are ready to create a bear leg in a trading range. And if you look at this bull leg here, it's not as, the market has gone up, but it's not a bull breakout spike and channel. Bull candle, dodgy, bull candle, pull back, a couple of bull candles, pull back, couple of, right, this was right at the at that level of resistance where we're at the open of the day with the bull channel. The bears at this stage, that was the first point where I was expecting the bull momentum to fail and the bears to come into the market and sell off and then test that, and then we can trade. But the bulls were strong enough to break out above it, so there was no entry for the bears. But you can see the sideways price action at that level of resistance, which has now become support. Bears again trying to gather momentum to sell off, lower high, and carry on. So we need a little bit more information. Will we get the pattern setting up in time for us to take a trade and make some profit before the news? We don't know. It's possible we could get one huge bull candle or two. Then we could get bulls trying to change direction. Then we get a lower high and get set up. That could all happen in the next, 6 or so candles, 6 to 9 candles, which would give us just a slight window of opportunity to take a trade and see if we get the acceleration. But let's follow it as it sets up and see if we can get that trade. So I'll just leave that there. We'll flip back to it as we progress. UK 100. Earlier on, we had the measured move of the first candle. You can really see that it's two-sided price action. But when you look at it as it's unfolding, we are not getting the setups that we want to trade. When we're looking at the open of the European markets before the UK market, this was the open of the UK session. We're down here, and actually we got up to here and said, well, good for the bulls. We had a moving average gap bar. If we get a decent enough pullback and a higher low, we can look to take the trade. But then we had this huge outside candle at the open trading range, and that kind of changed the structure of the market a bit. And we were so we stayed within that opening candle quite a bit. Then we've had the breakout beneath it, and come back and we're testing that. So for our price action, understanding of the structure of the market after that trading range, okay, we are still in a larger trading range. That's what we got. So we have the high of the trading range, we have the low of the trading range. All would like at this particular stage, and this could set up quicker for us than S&P 500. This is good strength by the bears. Okay, so we have the bears closing beneath the moving average, the bears closing beneath the open of the day. So if we get a lower high anywhere in here, might test that low or anywhere within there, that would be a good enough setup for us to consider selling. But if we do sell that, top of the trading range, a reversal trade, question always comes, where do you consider to put your stop? Do a measured move. Your stop is way above here. Okay, the only reason you'd have, so if you were to take an initial trade, let's say the bulls went up and the market turned here with a 2-bar reversal, technical place to put your stop would be way above there. You could put your stop above the high of yesterday because that's a key level of resistance. If the bears are strong, the market shouldn't get above that, so that you could do. Alternatively, if let's assume we get to the top and we get a decent enough 2-bar reversal, you look at the measured move of that 2-bar reversal is still here, but nearest technical level that can pull the market up would be the high of yesterday, so you put your stop above there. But that's just for you to prep. Let's wait to see what you actually get if the market gets there. So first option for us is to get a double top of sorts here, and then decent enough reversal. And if you want to take that first trade, you need a measured move stop. If you don't like the measured move stop and it's too far for you, you wait for a lower high. A lower high second entry would allow you to put a stop, a tighter stop just above the double top, if you do get the double top. So if we got that double top, if you want to take that first entry, you need a measured move stop. Okay. If you prefer higher probability trade, which is what I prefer, you look for a lower high or a breakout pullback. May not be a lower high, it may just breakout pullback near a moving average. That will still suffice. If you take that trade, then your stop can be above there. Okay, breakout pullback, stop above there, lower high, or just set the EMA, depends where it sets up. So it will depend ultimately on your risk appetite. Okay, the other one was the, don't have to worry about that. The other one was the, what I just deleted was the rectangle showing the trading range created by the open of the UK markets. So we're just going to hang around and come back and check that. Hang Seng 50. Okay, Hang Seng 50 has got some distinct openings. So the market opened 30 minutes ago, third session, where the gap up at that open. And that gap up went above this lower high and tested that lower high. Let's first dip pullback. Let's mark it for you. The bulls tried to gap up, they failed to gap up above that lower high, which was the first test after this bear breakout. Yeah, we spoke about that at great length. Bulls tried to break up above that, failed. So right now we are almost in the middle of the trading range from the morning. So if we want to buy, because there's still room to get up there, we do need to see the bulls breaking out above that and pulling back, and that would be a trend trade, which would be fantastic. You can put a tighter stop here. We're no longer trading a reversal, which we were looking to do earlier on, but the stop would have been there. If the bears are strong, then again, the bears must demonstrate strength. Couple of candles closing beneath moving averages. We need the pullback. Then we can look to trade. And definitely, if we're doing that in here, assume we get bear breakout. I don't know how many candles we get. We look for the pullback to give us a double top. Again, if you want to take the first trade, wherever it may be, you need to do a measured move off it. Or you can wait for from the double top breakout, pullback, lower high, wherever that may be. And then you can afford to put a tighter stop. Okay, first entry always need a measured move from a double top because market might just attempt one more push up to create a wedge and you don't want to get stopped out and then it goes your way. You know, you already used up some of your risk or, you know, you hesitate, decide whether to add in or not, and you lose out on a good opportunity. So use measured moves for that first reversal trade. Okay, and let us look at DAX 30. Huge acceleration up. You know, just after the open. So the opening candle was this. That was the opening candle. Outside candle, bears at an opportunity, failed breakout, tails on top, tails below. So, you know, trading range price action, and then just had huge acceleration by the bulls. And what was interesting about it, this was at that point the high of the Asian session, and when we looked at it and followed it as a failed breakout, which would mean for failed breakout, it means the bears are strong. And if the bears are strong, then you're going to have to wait for a bear setup to see if you can trade short. Or if the bulls are strong after the bear setup, then the bulls have to resume price action. So right now, there's a pattern setting up at the top of a potential trading range. Okay, so that would be the low of the trading range. That's the high of the trading range. I had an attempt to set up a wedge here, 3 push up 1, 2, 3. And the bears had the opportunity after the wedge top to sell off a couple of candles and then create for us a double top lower high. We did not get that. Instead, you know, we had the bulls trying to break out above that high, and still the bulls were not successful. So trading range price action that's created here is no opportunity for us to jump short at this stage or to go long. Okay, so we need to wait. Have a look at the case for the bears. After that inside pattern, breakout mode, bear candle, good for the bears. And all would have wanted to say, hey, the bears are strong. Let's look to just jump into a trade. Was a follow-through candle. But instead, before these 5 candles formed, we had a bear reversal, failed breakout. Bulls would have seen a higher low. But if you're a bull and for whatever reason ignoring this failed breakout and you jump into that trade, you can see immediately the problem that you have. Okay. But if you're taking that trade, your stop, as you know by now, is at a technical level, but down here, so you can still get out the small loss. But we don't put our stops randomly because we see a low test candle. We get stopped out unnecessarily. But there is no entry here in any case. For bears, we'd love to see what happens at that high. Okay, see if that gets tested. for the bull case, for the bulls to really dominate this market and try and get to the high of yesterday. And this is, we're still at the 50, we haven't gone the 50% midpoint. But for the bulls to get to that level, they need to break out above this forming trading range, that high, that low. If they break above that and they have bull candles and they're broken above midpoint of yesterday, which would fortify the argument for their attempt to go and test the high of yesterday. Okay, so we're going to have to wait again for this price action. And again, the waiting is not a problem, but at the back of our mind, we must consistently remind ourselves of the news coming up in 2.5 hours, just to make sure that when patterns set up, if it's within the time of the news, then it's best to let it go. And just wait for, the price action after the news. There's always opportunities for that. If we get a bit of chance, we'll look at again at some news charts. Okay, the daily charts. If we end up with any reversal here, I'm not doing anything. I want to wait to see if we get a double top here and a lower high. If the bulls do take control of the market, it's still trading range price action. I'm not willing to put 25% of my risk to get out there. That's scalping. I want to find entries that I can hold for a long time, either up or down on the daily time frame. Same kind of logic here. Even if this ends up as a low test, you got all of these levels. This is where the bear breakout started. It's been a key level of resistance. Okay, that tested it. That tested 1, 2, 3, 4. We had 4 days trying to close above where the bear breakout started. So even if that sets up, there's no point risking cut off my capital just to get to a level where there's possible reversal. So need to wait. Okay, same reasoning here. If you were to just look a bit to the left, if we were to get that kind of reversal signal somewhere at the top here, okay, then trade in the daily time frame, you can risk your 25% within that, hoping that price would carry on. Even if it goes sideways, you just hold on to it. But you need that kind of clarity here. If the market was down here, then we had this kind of candle, failed breakout and reversing clearly like that. That's one that I'll be prepared to risk 25% on the assumption that the failed breakout may go all the way to the top. I've said, quite a few times, tight trading range, even if you put the line charts, closes are going sideways. On the daily time frame for the Aussie, the really price action perspective, it's best to wait, because whether you buy at the bottom or sell at the top, it's going to be a reversal, higher probability of a reversal that turn, and you lose your hard-earned capital. So best to wait. Let's go back and see what setups we're getting. So for the bear case on the S&P 500, very weak breakout by the bears. Go to the 20 EMA, failed breakout. So the bulls are saying, oh, okay, we've got a higher low. Okay, so if you use that as a marker, there is still that gap between the breakout of this candle and that pullback or pullback of that candle, which is a breakout candle. So the bears have managed to come all the way down, but they've created a double bottom with that pullback. And we still have this breakout gap, which bears the bulls look at and say, hang on, we're strong enough. We've been able to resist the market. So as far as the bulls are concerned, they're saying, well, this is just a higher low. Okay, so if we have a higher low, and the bears have failed to come down here, we need to assess the ensuing strength of the bulls. If the bulls are strong, then they need to give us a couple of bull candles. And if you get those couple of bull candles and a pullback, then we have a higher low double bottom, which we can look to trade. But they need to give us that. As it is, they need to really turn the market pretty quickly at this stage. So we'll keep a watch on that and see if they do get that. Too early for us to jump into any shorts because there is no strength that the bears have shown us. You know, if on this candle, 3 minutes to go, the bulls are able to accelerate up when the higher low double bottom holds, and the bears are able to close down here and say, okay, the bears have nullified the case of the bulls, then we just need to see a lower high. Okay. We'll come and have a look at that. UK 100, okay, good strength for the bears. We're waiting to see, if we'll get anywhere here, either this candle or that candle. Let's see what gets tested. That was presently the high of the day. One of those, if the bears are strong, will give us a double top. And from that double top, if you're happy to trade a double top with a measured move, you can do that. Get the double top with a measured move, you can do that. Or you wait for a lower high or a failed breakout, which allows you to have a tighter stop. So that's the higher probability case. 60% probability that we get a double top and lower high. The other side of it, of course, we got 60% probability, 40% less likely scenario is all of a sudden the bulls start to accelerate, breakout candle, and breakout above that. Then if that scenario takes place and you get a breakout above the high of yesterday, then we gotta wait for a pullback to trade the pullback. That level of resistance is very important to bear in mind. If you go back to the daily breakout point, 9th of June. So we had a huge bear breakout, and the bears, the first level of resistance that the bears are going to defend is that, because that was a key low. Market went up, and the bears broke beneath that. When they broke beneath that and created that huge bear candle and follow through, and EMS turned in the direction of the trade, the key level they broke beneath was here. And that's where the bears are defending currently. You can see a wedge pattern here, 1, 2, 3. If the bulls break above that and break above this, then the bears are going to be worried about whether they can defend where the breakout candle started here or there. But at the present moment, that breakout point That's a key level that we're looking at. Back to the 5 minutes. Okay. So the high of yesterday and that breakout point is there. So in all of this, from the breakout point high of yesterday, this is all a sell zone. You can expect bears to defend that quite strongly. Okay, we've had a candle close while we're chatting, just flip back. Okay, 2-bar reversal. Bulls failed to capitalize on their failed breakout here. So let's see what they're going to give us. Maybe double bottom and accelerate up, or the bears are going to come back and try and test that. We can't take that trade here, that 2-bar reversal. There's no sign of strength by the bears here. You're going to be defending your shorts for quite a while. We need a sign of strength by the bears before we take a lower high. Otherwise, we're just taking a short in a developing tight trading range, and it's a recipe for losing capital unnecessarily. Saying 50, we are continuing to go sideways after that gap up, and until we get information from the market in terms of any breakout beneath here or a breakout above that, that tight trading range, there's huge fighting going on. Market of an area of agreement as far as price is concerned, but we need a breakout. So it is breakout mode. Tight trading range is breakout mode, and we anticipate that the market will break out or break below at any point. DAX 30, German 30. We're only going to be interested to do something right up here to see if we get a double top for the market to sell off. We're not going to be buying. We can't buy any in here because this pattern that's forming here is a reversal pattern. I mean, if you connect the lows, it looks like that is an outlier. We failed to break out above that. Let's converge in triangle, breakout mode. And even if you took a wider, more conservative pattern, again, the market is within a pattern that is forming to create a possible reversal pattern. So until we get huge any bullish strength, the bias, the probability at this stage is selling, either at a double top here. I mean, you see, we just got above here 50% pullback for the day. So that's kind of what we're looking at. And if we're selling, we want to sell also as high as we can on the pattern. You don't want to be selling down here even if you see best strength, because then you're selling straight into a level of support. And the bulls that came up and broke back above the low of yesterday are likely to reappear and defend this particular level. So it'd be worthwhile to just wait for it and see it unfold. Okay, we've got the last candle coming up before we close the show. Let's have a look at how things are setting up. Okay, so typically when I'm trading and looking at my charts in one view, because I'm not going to worry about daily time frame during the day. I'll look at them right at the end of the day or very first thing in the morning to see if they are setups. So I don't want to be confused. By those charts. Okay, so what are we going to be looking for? As we're going through the rest of the day until we catch up again, just about an hour after the news, just double check that. So the news is at 2:30. Well, I'm talking about my time. So exactly an hour after the news, we'll be looking at the chart. So in between then, if you're still trading, some of the things we'll be looking at for S&P 500, see if we get a double top somewhere within here. And if we get the double top, then we're going to be looking to look for shorts. But again, be wary. We are 2 hours from the news. If this doesn't set up within the next 30 or so minutes, there's no point taking the trade, because the dramatic price action before big news might just stop you out unnecessarily. Okay, Hang Seng, we need to break out of this tight trading range. So even if you mark it on your own charts, you need to break out of that, breakout pullback, breakout pullback. UK 100, we have to get to the top here and see if we get a double top or lower high. If you don't get it and the market accelerates down, then let's see if we get a double bottom, but don't trade in the middle. German 30, again, we don't want to trade in the middle. If we get a double top here, we can trade. And if for some reason we get a huge bear candle coming to test this low, and then we get a higher low out of that, we need to trade. But again, you just need to exercise caution with the news that is coming up. Okay, I'm going to be actively still looking for trades, just looking at the time. For the next 45 minutes, I'm going to be actively looking. If I do not see a trade that I want to take in that, then I am out of the market. Just go have some lunch or something my time, because it's midday my time, and wait for that news announcement. After the news announcement, we must come into the market and look at which one was that gave us, after the news announcement, we have to come back into the market. So here was the opening of the UK session. Remember, the open is just like news announcement. You have to come back and wait for 3-4 candles and see what setup you get. So do not stay away after the news announcement. And I will see you back in the market exactly an hour after the news announcement for the open of the US session. And let's see if we've taken any trades before then, or if anything has set up for us after the news announcement. As of now, let's just wait patiently for those extremes that we're talking about. All right, traders, we will see you shortly in the afternoon. Take care. Marlon, thank you very much for hosting the show. We'll see everybody later on. Take care and bye-bye.